Hi and welcome to the 9th issue of my Advanced Traders newsletter. Today I want to talk about the imperialism in the Forex industry. In other words, what does smart money do behind the scenes? It is not a secret at all that smart money or the institutions have certain advantages over the retail traders like myself and yourself. They are the market makers, movers, the market reason, the big reason. In this video, I will reveal some of the secrets I have learned while working for the big guys and while working with the big guys. And I can tell you one thing, our goal is to learn how to identify the big money, and that's where we will want to be. So, imperialism in the Forex industry, or actually any financial market, could affect and could be recognized by stop loss hunting, by mirror moves, and by magnetic levels. Stop loss hunting. The truth is quite simple actually, and for the seasoned traders among you, this one will not come as a surprise. Once an important level is reached, market makers, or the big guys, the sharks, we'll have to call them, can push the prices a bit further in order to collect the stop losses placed right above or below these levels. You have to remember one very simple thing. Every trading, every financial market is zero-sum game. If someone makes money, someone has to lose it. Always like that. It simply cannot be the other way. Money switch hands, and that's what the big guys love to do. Catch stop losses means get the money and bring in more money, because normally traders or machines that lose the trade always be looking for another trade to be involved with. So Fibonacci retracement and expansions levels could be as example for such zones of stop loss hunting. Support resistance zones could be dynamic support resistance, trend line, in other words, figure numbers, wave duplications, and much more. Let's see an example. See what's going on here on this trend line, for example, here, and on this support area here, and this kind of trend line here. That's all stop loss hunting. That's what they do. In this example, you actually can see how the trend line was broken up, false break, before the continuation down. Same here, here and here. Classical smart money fingerprint to collect stop losses, to make the traders lose money and bring them back by making them believe the market is still going to do what they wanted. So that's one example. Let's see another one. In this example, you can see how Fibonacci retracement level actually uses as a stop loss hunting. Drop down, fixing it, giving the signals that the game is over, we are ready for sales, and no, one more push to catch the stop losses in order to continue down right after that. Yep, that's how it looks like. Now, about the mirror moves, or another name, the V pattern. The idea is it looks like a V, inverted or regular. Mirror moves or V pattern moves are usually caused because of option traders. They cause it. The options inside include protections, include insurances, and so on. Positions normally built according to strategies, and that's affected by mirror moves. A mirror move is easily identified once it's over. It goes in one direction only with almost no retraces, and then usually shoots back in the opposite direction, normally on the same pace. That's why it's called a mirror. Here are a few examples for mirror, and this is where you can see how price move up, down on the same pace. Before it did exactly the same. Boom, boom, boom. Boom, boom, boom. Same pace, same idea. More examples. Alright, so the mirror move conclusion is that's where the big money involved. That's how we know the big money is trading now. When it is mirror, that means they are working and we could look for great opportunities to trade. Now, the next one is magnetic levels. Magnetic levels are the ones where two or more Fibonacci levels from different cycles or different measures appear very close to each other. If you have a look on this example right here, okay, you would see that if I measure the entire move here, this huge cycle and shorter cycle, I will get, see these levels? That's great zone of reaction. Same here. Great combined levels. Every time I will come in such levels, I will see a war, a war, a war. Alright? Why? That's magnets. Normally, the big guys, once they recognize some magnet levels, we ride on different cycles, they will take the prices inside. And then you will have a bounce. And why you will have a bounce? Because that's where they close their positions. And that's where you get a bounce. How good is that? The next one is more advanced examples. I took Fibonacci retracement and the Fibo expansion, and that's what I got. I got this cycle with the red lines, this was the black lines, that's the red lines, and small one by, this is the expansion basically, like that, by blue lines. And what you can see here, we got several monster zones of these two, these two, these two, but the most important one was right here, where triple cycle was involved. And once we are in, guess what happened? We are mirroring, we are bouncing and bouncing and bouncing to bring in the retrace. And the retrace happened because they took these prices down to this zone, recognizing the magnet levels. That means they play the market. That means they are moving the market. And that means they are here. By they, I mean the big money, the big traders, the institutions. And if they are in the game, I know I want to be in the game. As simple as it sounds. Okay? Now, another thing, magnet levels also used as great support and resistances simply because we know the big money is going to cash out there or get involved with new positions. Okay? Now, of course, market makers are aware of that, so such levels could also cause some fake breaks before we get the move. That's the idea here. So that will be all for this video, my friend. I hope you enjoyed it, and I hope I opened your eyes to some of the hidden reality of the market, any financial market, not just the Forex. The contact details, my Skype, as you can see on the middle of the screen, Vladimir.Ribakov, and the email below is the email of the support team. For any question, we are here for you. Thank you for your time watching this video. I wish you best and great trading. Yours, Vladimir Ribakov.